Hey everybody, this is Paul doing a quick video. The time or the day here is June 3rd. It's a Thursday at 1:44 p.m. Central Time. The market is currently open. As you can see from CNBC's horrible website that has ads everywhere. Um, just kind of going to go over a few things. Look at the last, well, not even really week, but the last 2 days or so. Friday, Tuesday, and Wednesday. Go over performance, just what I've put some money into, that kind of stuff. Um, as it stands right now, the market is kind of doing a thing where it's trading flat. So you'll get like, say, it'll go up, say 100 points or whatever, and then the very next day it'll go down 100 points. So it kind of offsets itself. Um, Rates will, so for example, if you look at bond rates, they'll go up one day and the market will react to that, and then they'll go down the next day. It's almost kind of like vaccine news from last year, where it was kind of like it started to become predictable. Whereas, like, if you got vaccine news on a Friday, then you knew the market was going to be up by Monday, and then if the COVID numbers came in worse than expected, which of course they did, then it was going to be down the next week, and then it just kind of, oh, here's some vaccine news, or it was like the trade news, like, oh, it's like, oh, we got a trade deal with China. Oh no, we don't have a trade deal. It was like, I think somebody graphed it out, and we had 40 news articles each week, or like through the year, where it was like just news. So what what we got here right now is it's kind of a market that's kind of stuck in a, it's basically a market that's stuck in a range, and it's trying to time investments when you're on like a down day, for example. So one thing I've done so far is basically I have a cash balance that I'm holding here in the 500 to 200 range. And whenever I get a day where I have a stock that's down 1%, what I'll do, so for example, this was down, I believe, 1% this morning. So this was down about 1% this morning. If you look here, I'm up 1% now. So this was down about 1%. This is a stock that has a dividend date that's coming up, or so I put some money into that one share right there. I did this same thing with, I believe, Verizon the other day. I just kind of been doing that with if I see something that's down about 1% and I got the money there, so here's an example, 1%, but you see how it's up by 2% now. So just kind of throwing money that way. I guess I can go over some dividends that paid around the first also. It's June, so there's a lot of stuff that pays out. So basically all of my municipal bonds pay out on the first. Where are we at here? So pretty much from all of these are dividends that are paying out. This is me buying 2 shares of GD. It's a large amount because it's an expensive stock, but I wanted to add to that position. Here's an example right here. So you can kind of see where I've been putting money also. Basically, Leggett and Platt was also down 1% yesterday, so I added 1 share. It's down 1% today, so I added 1 share. So you can see the prices I'm buying at. But I'm doing it mostly for the dividends. So if you look, I've had, I'm not even sure, I think I added this up. I forgot how much this adds up to. And then I had QILD also pay out. Um, so QILD is my biggest payer right here at 59.23. I did a video that explained like kind of what was going on there, and then I'll just look at further dividends that I got going on here. The last time I posted a video, I think my dividends were in the 2400 range, and now they're in the 2530 range. I haven't added anything more to my IRA yet. I'm gonna do that later on. But right now I'm at 2550. Average per month is $210. Some more dividends I got paying out. I got a Pfizer is a big one that's about to pay out. Johnson and Johnson, IBM is a big one. It's just kind of consistent through the month of June. Pepsi at the end of the month. And then we go into July, and this is all of July right here. July looks kind of like June, to be honest with you, how much I got paying out, but I have so much paying on the first, which was a very specific strategy that I adopted. If you look, a lot of it's front loaded on the first, and then if you go all the way out to August, you'll see Verizon, and then I got KYLD also paying out, and then um, yeah, so I just have a lot of stuff. So all my municipal bonds pay around the first, KYLD, Verizon, and then CBS pays right behind it. So gonna keep adding to those positions. The next position I would add to pretty much anything under 1,000 at the moment. I definitely want to get everything, start boosting everything back up. As I'm definitely starting to, as you can see here, my next stock might actually be Travelers, for example, on a reopening trade. Um, I did take some profits on regions, I think, since my last video. Let me see. No, I haven't taken profits in a while on that. I think I'm done taking profits on most everything right now. Unless I see, like I say, a 15-20% move or something like that in a stock, then I'll take profits on the way up. But since the market has been trading flat, so for June, I was able to fill in this finally. So I was up $886. And in my last video, I did tell you, I've been using this account for like daily purchases and stuff. I actually spent like $600 out of this account, and I was still up $886 in May. So May wasn't actually flat, really. If I hadn't had that money spent, it would have been up $1,400. But so this is currently where we're sitting at here, and right now, as it stands, I haven't even updated this yet, but right now I'm up $64. So in 2 days, I've made $453 in the market plus this right here. So $510 in 2 days. Not too bad. Pretty good. And I'm hoping that June, what I'm really hoping is, because we get the jobs report tomorrow, and what I'm really hoping is like the ADP numbers have kind of shown that, May job report should be much stronger than April's, and I'm expecting major, major revisions to that April jobs report, which I've detailed in my last videos, because I believe that the seasonal adjustments that they did were far too extreme. For example, they said there was no construction job growth at all in April, which is just ridiculous when you have home sales through the roof. Like, it makes no sense. So I'm expecting that jobs report to be really positive news. The only problem with that jobs report is that might make the market think the Fed is going to go, oh, good jobs report, so we're going to have to like taper and stop buying bonds earlier. So that's going to make bond rates go up, which is going to tank the NASDAQ, because that's effectively what's going on right now. The Fed ended one of its programs that literally nobody was using. Out of a multi-trillion-dollar corporate debt market, the Fed bought like $10 billion worth of Apple bonds. Like, Apple has $200 billion of cash on hand, and they bought like $10 billion of their bonds. It was a joke at the time. It's just a program that nobody was using, but they're like, oh, well, the Fed ended that, so that must mean they're going to end buying government bonds. Well, those are two very different things. Those are two very, very different things. If they stop buying government bonds tomorrow, you would see rates shoot up pretty fast. Yeah, you would even this move right here, this 1 basis point move on the 2 year is actually a lot, because the Fed actually controls this. Like, the Fed actually has a lot of control over this part right here, and it's still up 1 basis point. That tells you how freaked out the market is. They don't care about inflation. What they care about is the Fed tapering. That's the word. Taper, taper, taper. This whole market rests on like tapering. But if they do start to taper, the way it'll work is they'll give notice that they're gonna do it, and then do it like 6 or 7 months. And then right now they're doing like $120 billion worth of purchases. They might back that down to like 110. They're going to go really slow at first. In theory, government spending should adjust so that as the Fed stops buying these bonds and rates start to creep up a little, the federal government and politicians start going, oh, well, maybe we need to cut some debt and we need to kind of cut things. That's how this is supposed to work. Actually, none of this is supposed to work like this. The Fed's not supposed to be buying any of this, and the government's not supposed to have such a massive deficit. But you know, if you're a millennial, these are just things that have occurred in our lifetimes. Um, like the Fed is basically controlling the entire bond market. They just control this entire thing. So these rates just kind of sit flat. And then the simple fact, we have positive rates. Europe has negative rates. Japan has negative rates, and those are our two biggest allies. So you got to learn. I'm waiting for confirmation, but it's every time that this hits 1.7, somebody comes in here and buys a ton of government debt to bring this back down. And I'm thinking it's like Japanese pension funds, European pension funds. Somebody in there just jumps in there and starts buying a lot of government debt. And they're the only ones I can think. Somebody comes in there. It's either the Federal Reserve does something strange or what, I don't know. But right now, my plan is to basically just keep balancing out my portfolio, increasing my dividends. I was telling my spouse, it's like every single time that I buy a single share, so like I can actually demonstrate this now while we're on this little video here. I don't want this to get too long. I'm not even sure how long this is. But, it's only a 12-minute video, but, just to give you a general idea. So, like, for example, like, right now, I'm at 2418.7, okay? I have this much cash. This has a dividend date. This has the next dividend date, so this right here. And it'll pay out on July 1st. Let me buy one share of this. This isn't down 1%. Normally I wouldn't do this, but just to show you. One share. And I'll show it. And this is a power company in Pennsylvania. This is like, it actually stands for something. I totally can't remember at the moment. Does it stand for Pennsylvania Power and Electric? I swear to God, I think that's what it stands for. But, so that's one share. Okay. So just to demonstrate what that looks like. So you see how my cash balance is 169.41. So here's what I normally do. Update that. And then I just bought my one little share. And this is the spreadsheet that I have. This is not some complicated spreadsheet. This is a very straightforward, simple spreadsheet. And then my new cost basis is that. And I'll even update the price even though it's not even settled, done for the day, but you can see I'm up, I don't get this for the capital gains. This is a utility. I get it for the dividends. That's all I get it for. It's a state-owned monopoly, basically. State-sanctioned monopolies. But now, all of a sudden, I just gave myself a $2 raise. So I was at 2418.7. Now I'm at 2420.34. And if you look at this little number up here, my average monthly, watch. 211. And I just gave myself a raise. And if I go to July, it's actually higher now. I think this was at something. I forgot what this was. Probably lower than this. Maybe like 196.1 or something. But now that I got this one extra share that pays 41 cents a share, now I get 43.16. Before this was 42.7 probably. But now, so that'll be my next month's check basically. If you look at it, because I bought it before the ex-dividend date, and the trade has time to settle. So what I like to do is I normally like to try and buy at least 3 days before the ex-dividend date, 3 business days before the ex-dividend date, so that the trade has time to settle, so that there's no questioning this. At least 3 days before the ex-dividend date, and now I got it. And then now that one share I just bought will pay right there. And if you look at it, there you go. It's still trading flat, but probably because I haven't hit refresh. Yeah. But if you look at this, where's it at? It's still right about there. It's still trading flat. Price hasn't moved much. There's not much volume in there. One guy asked me. He commented on my video from February, where I said I sold my AMC shares, and I replied back to the guy because he's like, well, I bought $1,000 worth. He didn't say when he bought it, but he said it's worth 45,000 now, so that makes me think he bought it when it was maybe like $2 a share or something. But that doesn't even make sense. But now it's at this 58. But here's the thing about AMC, and this is why I'm not touching it, is because, okay, right now it's at 59. Earlier today, this is just a 1-day chart. Earlier today, it was at 37. Then it went up here to 66. Then it went back down to 59. And you can see the literal value of this company is changing by the billions. This is not, I hate and I despise. If you ever follow me on Twitter, you will see me comment. I hate and despise business networks that dare to say this is retail traders. Like some guys on Wall Street Bets are moving the price of this by billions in a second. Like this number right here, this is 671 million. This you see this right here? The value of the stock just changed by 400 million. And the nerve of CNBC and Bloomberg and their experts to sit there and say, well, retail's doing it again. Do you remotely think this is not retail? You're insane. You shouldn't. I don't think people should be allowed to trade if you say something that stupid. It's just so stupid. I can't put into words how stupid I think that is whenever I hear somebody say that. Oh, retail's at it again. Maybe when it was like $2, and you had like maybe millions of retail traders jumping into the same stock that was cheap. That's what happened with BlackBerry. But right now it's a $59 stock. It's just insane. Like, you have a stock like under their theory, retail could all decide they want to rush into a Leggett and Platt right here, or Coke. What Coke has a less. Where's Coke at? I think it might have a higher valuation, but yeah, I'm pretty sure it does without a doubt. Like a higher market cap, obviously, but that would be like if all of a sudden the value of Coke just started shifting around and flicking around and stuff, and like they blame retail for it. No, these things moving by billions. These are hedge funds. These are hedge funds playing each other. And it's probably Citadel and BlackRock, I think somebody said, who are just trying to put each other out of business, basically. But these guys are just, they're swinging it back and forth, and it's algorithms that are in there. Like, these guys are playing in the billions game. This is not retail. This is insane. Retail might be along for the ride. You might have some retail up with like a 1-minute chart. Looking at candles like this on a 1-minute chart. Some of the popular, or one of the popular Twitch streamers does this, and I have no idea why he does this. But, he'll go to his bar chart and he'll be like, oh my God, look at the drop, look at this volume. But these are guys doing, like, to get something like this to generate on like a chart for a stock, you're talking multi-million, like $400 million to get this thing to move like this. This isn't retail, it's insane. And then something like this is probably this guy right here who bought right here who probably dumped all their shares. Or it might be this one right here. It's probably the same guy. This is what they're literally doing. They're selling it off, and then retail sells, and then they're buying back in up here, and then they're selling, and then retail sells. Like, if that's how you want to trade, more power to you. It's like you have to sit there and literally watch it. It might be predictable at some points, but you literally have to watch the 1-minute chart. Because as soon as it starts to dip, you're out. You're done. Because if you see it goes all the way down until it hits some resistance where it had a last price that it was resistant, but then sometimes you can get some insanity like this big candle right here. Like, I'm not that kind of trader. I just showed you the kind of trader I am. Here's some stocks. Here they are. Here's some safe, boring stocks, It's like, that's all I'm doing right now. If I wanted, this would make my hair turn completely gray. Because you would have to follow this. You have no choice. And then you're also just chasing billionaires, hedge funds. It's insane. I can never do it. There's one guy who does it on Twitch. His name's The Stock Guy. He should call himself The Options Guy because that's all he ever does. He's not buying and selling stocks on the stream. He might be. every rarely, but he does nothing but options, and he can see how fast he can either win in a position or get destroyed in a position. And he shows how to win, but if you get a if he goes to sell and you got like a delay in the stream, he might have sold for a profit, but he might have sold right here, and then all of a sudden you catch this right here. And that's what we're talking about. Like, or you could get destroyed doing that stuff. Some people are really good at it. Don't touch that stuff unless you know what you're doing. That's all I gotta say. But that's not my trading style. I'm not doing that. I'm like, you can get rich doing it if you really knew what you were doing, but you can get wrecked on those plays really fast. Because you get this. You get a stock that's moving by billions. This thing was at 30 billion. Now it's at 28 billion. And CNBC and Bloomberg want you to believe that that's retail doing that. Well, a retail trader just became a billionaire with some of his massive moves. This is insanity. Nobody's that stupid. Um, and they might say it's options magnifying the price. No, you have to put up the money, okay? Like you have to have, you have to put up the money to be able to do some of this stuff. It's whatever. But this is where I'm at right now. In my last video, I don't even know what I was at. In my last video, I believe I was stuck at a certain amount forever in May. In my last video, I was at 55,816. So right now, about $400 higher. So it's pretty good. But yeah, definitely going to keep adding on. Any extra money I get, I'll throw into those stocks that I pointed out. Just pretty much anything that has a 1% down day, I'm trying to buy. And then I'll post on Twitter if I do any sales. Well, that's it for me. If you have any questions, leave them in the comments. If you have any smart-ass comments, leave them in the comments. I'll be happy to reply to you. As that one guy that just threw me completely off, he bragged on me when it was 30% down, saying I should have held on to it. I'm like, dude, what? This is a weird day to brag about holding on to AMC. But, like, I don't know what he's bragging about. But, so just let me know what you think. Y'all have a nice day.